I'm joined today by Alex Grellier, CEO and founder of Drooms. Alex, thanks very much for joining us. We're halfway through the year, so how would you characterize the first half of 2024?
The first half of 2024 was a particularly unstable year. So, with some positive messages, some negative messages, a lot of players not really knowing when to act, how to act, at what price to act. So, a lot of uncertainties, I would say.
And you published your real estate trends report in February this year. So, how much has the market evolved since then?
I'm really curious to see the one that we're going to publish next year. But from the last time we have published it to today, we have seen far more activity, but as well some, I would say, negative activity when you saw fire sales, when you saw bankruptcies. On the other side, we saw some deals going through. Probably there was a common ground that buyers and sellers found. So a little bit more activity.
It's interesting to see that positive view in terms of the activity. The market's obviously been looking for positive signs, particularly in terms of the interest rate environment. So how significant do you see the recent ECB move?
Interest rates going a little bit down may not have such a big impact. From what people told me from the markets is like when you have your 2020 pricing in mind, which are still here, and then you go and look at the pricing today, even though the interest rates may go down a little bit, but we are far away from what we have seen a couple of years back. So this is what brings this uncertainty, I believe, is that you, on one hand side, yes, you have interest rates going down a little bit, which is good. On the other side, you have a massive cost increase due to strong ESG regulations, which are kicking in and which for some actors maybe not become a problem, but a real challenge.
Yeah, and it's interesting with that ECB rate cut. Even so, there's still been a big focus and big discussions around distress in the market. So what's your take on that, Alex?
Distressed, unfortunately, we're seeing more and more and in more countries. That is definitely a fact. So distressed assets do not mean that these assets are gone, so they will be traded, but the financing around is becoming more and more critical. And so we're seeing more and more banks who are now realizing that they might have to do something. This market has become, again, a market which at least in Germany, disappeared for a while, but I would definitely say it's back.
And looking at ESG, your survey last year, Alex, highlighted some of the key areas, particularly for investors. So what are you seeing? Do you think there's been a change over the first half of 2024?
It hasn't been a change, no. I would say it has been taken more and more serious. People are really concerned about it, and the investments need to be done. And this is a matter of fact. And I believe that there are more and more players understanding that ESG came to stay and is not such like a wave coming and then going away. Having said that, we really need to see and to look at the assets in a whole from an ESG perspective as well as from a finance perspective. And this can sometimes be complicated.
And in previous downturns, in terms of market cycle, ESG has sort of slipped out of focus a little bit, as you kind of highlighted there. Do you think there's an effect from the general downturn in the market at the moment? Because people have got to focus on other areas, potentially the business. How do you see the outlook in terms of key challenges, trends, and opportunities around ESG?
There are opportunities there, but today, the players in the market I'm talking to, they see more challenges than opportunities. What I tend to do once in a while is I look to the United States, and what I see there is that you have some states who went against some players who have adapted ESG in an early stage, trying to really go against all these ESG laws and telling that it is basically stealing their revenues. And I'm not sure what comes. There is a clear view from the EU and the countries inside the EU to really push that forward. Now, the last elections have shown that people are not really happy with what they see today. So I'm not sure how long and how intensively we're going to work on it. But so far, I don't see any pullback or anything like this. So people need to comply with the laws. People need to comply with what's going on in the markets. And so it's interesting to see that it has a major impact, and this impact is not going away right now.
Yeah, I think what's happening in the US is interesting with that focus on fiduciary risk, just because obviously there's also a risk for investors in taking sustainability and the environmental side not seriously enough, because of course, in terms of resilience and values of the asset, that can potentially have a big effect going forward.
If you look at France, you have assets right now which you cannot even put out for rent. So, and an asset which doesn't bring any kind of revenue, you will considering as a stranded asset. So there is this obligation to do these kind of things, like renovating and get it ESG compliant, which has a massive impact on the costs. Hence, the value of the asset will either go down unless you have invested these costs, or if you want to maintain that level of value, you need to do the investment beforehand.
And are you planning another ESG survey, Alex? Because I thought that was really interesting.
Actually, we created an ESG department. We have very knowledgeable ESG people now on board that we hired recently. And I think it's really important. It will not go away. So we need to deal with it. We need to really assess what is needed to maintain an asset as a non-stranded asset. And so you will definitely see a new survey coming from our house. Yeah.
Great to hear that. And thanks very much for joining us, Alex.
Thank you very much.